Good morning, good afternoon, good evening, whenever you happen to be watching this week's Weekly Wednesday video. I gotta think of it. I'm trying not to have tongue twisters. Happy 2024, y'all. I've said it before. Welcome into the new year again. Our offices are open this week. We are working through some things, getting ready for the tax season. For those of you who are currently our clients, be on the lookout for organizers and welcome messages for what to do for the tax season. And then over the next couple of weeks, I'm going to give you some illustrations, some videos to show you how to maneuver through some stuff, understand what is going on with our organizers, how to fill some stuff out, understand our workflows, everything like that. But for now, this week, over the break, we had a client, email subscriber actually do what we asked you to do, and I'm so excited for it, right? So we had somebody reach out and ask us a specific question for their industry. But because it is dealing with something that can apply to everyone, I wanted to talk about it, okay? So it is dealing with estimated taxes for self-employed individuals. Mainly, this individual is in the trucking industry. However, I want to break this down for everybody who is self-employed. If you're an independent contractor, you're getting a 1099 NEC, you're running your own business, whether that be an LLC, a sole proprietorship, an S corporation, a partnership, a C corporation, this applies to you. Now, this is how I go about looking at it. I actually look at real numbers, right? So this is how I try to figure it out on a quarterly basis. Now, the rule of thumb for the IRS is if you know that you're going to owe $1,000 or more, then ideally you should be paying some sort of estimated taxes, whether you're doing that quarterly or whether you're doing it on an annual, right? So you're looking at your bottom line at the end of the year and trying to figure it out. But the deal is if you believe, right, that you're going to owe at least $1,000 and you're self-employed, that means you've made $5,000 profit after expenses. Revenue comes in, we do expenses, and you feel like you're profiting $5,000, that's going to generate about $1,000 in taxes. Then what you need to do is set aside estimated tax amounts, okay? And so what I try to do as a rule of thumb is if you've owed in the past or you've had self-employment income in the past, I try to use your previous tax return as a baseline. Why? Because the tax rule really is for everybody that your tax liability needs to be either 100% of last year's tax, so 100% of your 2022 tax, or 90% of this year's tax. That's how you get away from paying an underpayment penalty. But if you really want to know what your tax liability may end up being for the year, then I like to look at stuff on a quarterly basis. I really do. And I just use this formula. It's really easy. I go revenue minus expenses, whether I have a profit or a loss, right? If I have a profit, because if you got a loss, 0 times whatever is going to be 0, right? For that quarter, I like to look at that and I go ahead and I use a really conservative amount. Really, it should be around 15 to 20% that you set aside for IRS, 10% that you set aside for your state. But I tell a lot of people starting out, go ahead and set aside 30% for federal. You're not going to need to give them all of that, but I would rather you have that cushion in another account or go ahead and make the payment. I would rather you have that cushion so you're not worried about it as much. And rule of thumb, I don't care what state you're in. I know everybody's state tax is not the same, but I try to set aside 10% for state. And I do have it in an account. Some people call it a tax account. Some people call it a reserve account. Some people have a separate savings account. I move that money out so that it is sitting there available for when I need to stroke the check, that I can stroke the check. Don't leave that money in your operating account, because if you leave it in your operating account, I promise you, when it goes to pay The tax man, it ain't gonna be there. You will have looked at it like it is operating income for you to do whatever it is you trying to do. Do not do that. Move that money aside. And so on average, you can do this on a monthly basis. You can do it on a quarterly basis. But I need you to go ahead and know that in most cases, your quarterly tax payment is due April 15th. Well, it started out January 15th. That's from the previous year. So April 15th, was it June 15th? It's really weird between those two. They're close. April 15th, June 15th, September 15th, and then for the end of the year is January 15th of the following year. That's how the quarterly cycles go. April 15th, June 15th, September 15th, and then January 15th, and that gets you through your 4 quarters of payment. Or you can do it on okay, I'm on a calendar, right? Or you do it when you get paid. You can look at your books on a monthly basis and say, I made this much. I had this much in expenses. Let me go ahead and set aside this money and go ahead and pay estimated taxes for the month. There's nothing wrong with that. But if you're not actually giving the money to the tax person, I need you to go ahead and set that money aside in an account. I don't care what industry you're in. If you are sitting there, right, and you know you are self-employed, I need you to account for why? Because we're in businesses to make profit. And if you're going to have a profit of $1,000 or more, you need to be prepared that you are going to have to pay taxes of some sort. Okay? Now, when we start talking about nuances with entities and how to offset and tax, that's a tax consult. That is a consult all day. But this one about percentages for estimated taxes, I felt like this question comes up all the time. How do I go about doing it? Where do I do it? How much do I set aside? I say from a very conservative route, we're talking about 40% of that money, allocate. And that's high. I'm telling y'all that now. That's high percentage. Why? Because self-employment tax is really only 15%. I can tell you that. If you're on a Schedule C, it's only 15%. So I tell you, I would rather you had that money set aside cushion-wise and you have 40% of your, if you can operate your business off of 60% and take 40% and set that aside as your cushion, you're going to feel so much better. You're going to feel so much better. And don't forget to pay yourselves, guys. Don't forget to find a way to pay. That's a whole different question for a whole different manner for a whole different day. But I want you to know, thank you to that person who asked the question. I wanted to definitely get that information to you all. Go ahead. Remember those dates. April 15th, June 15th, September 15th, January 15th. That'll take you through your year and the percentages and how you go about it. You are only paying tax on the profit. That's after expenses. You are not necessarily paying tax on the revenue. You're paying tax after expenses. All right. Got any other questions, concerns? Y'all know. Go ahead and make a tax consult or a business consult, depending on which one it is. Yes, there is a fee, but I promise you, you'll get more than your money's worth. Talk to you soon. Talk to y'all next week. Peace.